up, Maverick traders? This is Rob Reinhold. As always, I'm joined by Mr. Ankit Sharma, and this is the Currency Room. This is the last week of August, so this is our last week to add pips onto the August numbers, and then we close the books on August and we jump into September at the end of the week. So another great trading period. August was a fantastic trading period. Typically, August is my least favorite trading month of the entire year. This year, it's been dynamite. So we're very happy with the market volatility and activity. Let's jump into what happened last week. We basically had a week of Monday weakness. Monday was very weak. Tuesday, Wednesday bottomed out, and then Thursday was super strong. And by the end of Thursday, we were basically up a little bit on the week. And then we heard from Fed Chairman Powell at the Jackson Hole Symposium on Friday, and it crushed everything. It crushed everything. The markets had a big sell-off on Friday. So now this is our second consecutive down week, and everything got hit on Friday. Cryptos got hit, commodities got hit, stocks got hit. Everything was sold off on Friday. And, Powell basically came on and said, our fight is not over, and we are going to do more earlier. We don't want to wait too long to do anything. We want to be very aggressive right up front. And so the market went from having about a 48% chance of a 75% rate hike up to about a 75% chance of a 75 basis rate hike in the next FOMC meeting. So big movements in the Federal Reserve in the US. It was a quiet week for economic reports. As you can see, we got PMIs out of Europe and the UK, and Germany was the standout. Germany was looking really good, but everything else was pretty weak. This really supports the position that Europe and the UK are sliding deeper into recession, and that has affected both the pound and the euro quite a bit. Other than that, it was just the Jackson Hole Symposium, and that was about it. So let's take a look at the price action that we saw last week. As I said earlier, if we took a screenshot of this on Thursday, it actually would have looked okay. It would have looked pretty good for the week. If we took a screenshot of it on Monday, it would have looked pretty bad. And so here we are on a Friday. The market actually isn't even closed yet, so who knows where we're really going to end up. But on the week, down 2% in equities, down about 5.5% on crypto. Gold and oil also sold off. As I said, everything was sold off. If we take a look at the markets here, we talked about this band of support from 4080 up to 4160 on the S&P 500. We're right in that range, but it's starting to look like it wants to break lower. If it does break lower, our next target is that 50-day moving average down at 4,000 on the S&P. That's another 2.2% to get down to that level. If we don't get a big bounce on Monday, then I think we're going to come down and hit that 50-day moving average somewhere in the next week or two. We talked about this last week. It is the worst month for equities in all the months of the year. The most crashes have happened in September than any other month of the year. We are running headlong into these seasonality patterns that we just can't ignore. We talked about it last week and said, hey, get ready for it. We don't know if it's going to happen, but we have to be aware that September's could get really nasty. This is setting up for a nasty September. If we break below this little support level and we go down and we bounce a little bit off the 50 and then plunge below it, it is setting up for a really nasty September. Let's take a look at the percentage returns on currencies here. The euro, surprisingly, was the best currency of the week. I was looking to be short euro all week. I took a short euro trade. It was looking pretty good. And then on Friday, we got some news out that spiked the euro up, and I was stopped out on that one. Other than that, weak Kiwi was a good trade this week. I know we had a lot of traders in short Kiwi. Short Kiwi trades were fantastic across the board. Really, all week long, that Kiwi sold off. And dollar, we're going to be talking a lot about the dollar. It's looking very much back in play on the long side. Cryptos look terrible. We talked about how they broke down out of that channel 2 weeks ago, and we said don't touch these on the long side, and they just keep falling down. You can see there was nowhere to hide. One day, Bitcoin Cash actually had a 12% jump one of the days this week, and it still finished the week down almost 8%. So let's do a real hard look at the technicals of the market and where we stand. Looking specifically at the S&P, we are below the 20-day moving average, above the 50-day moving average. We always call this no man's land. It's very confusing when you're using moving averages and average prices. You're saying, hey, it's weak over the last 20 days. It's weaker than it's been over the last 20 days, but it's stronger it's been over the last 50 days. That is a first signal of trend change. We had this big move higher from the June lows, and we're now down below this point where it's like, okay, we're now starting to see that this trend could be over. Now, let me give you my opinion. I do think this move is over. I do think we're going to lose most, if not all, of this gain, and I do think we're setting up for a really ugly September. That is my opinion. As a young trader, I used to trade my opinion, and I would have already been heavily short thinking, oh, this thing's definitely going down. I'm going to make so much money off this. Now, as an older trader and not as brash as I used to be, I trade the charts. I don't trade my opinion anymore. So while my opinion may be very bearish at the moment, I have to trade the charts. And basically it's saying, okay, it's right at the bottom of this support here. If it holds this support, you've got to buy it if it bounces. If we break through the support, then it's heading down to that 20-day moving average. You got about a 2.2% drop that you can take advantage of on the short side. But down there, you have to be very cautious on being aggressively short past that point because that's a likely place to bounce. That's how you have to trade it. You can't trade your opinion. I don't care how strongly you believe it. I don't care how many pages of an essay you could write about it. You trade the market in front of you. Ankit, what do you think is going to happen with the S&P here?
Yeah, Rob. Well, I agree. I mean, I think on the same boat over here that, we've seen this massive rally in the markets. And so right now, there's not a whole lot to support it. And I think that's what's really market come down to. The markets were getting a little bit ahead of the Fed, that we got a lot of unwinding in the markets. We saw some fears coming back off as the CPI numbers started to cool off. But again, now what the market's realizing is that, no, the Fed is staying on the same path. So I think as the markets start to catch up with the market expectation or the Fed expectation, there's a good chance for that market to give up more of the gains. Remember, we actually rallied about 16% off the lows. So we still have a little bit more room to give up before we can decide which way it wants to go. So I think in the next immediate path is towards that 50-day moving average. That's a very doable, course of path here that we can find. After that, I agree. After that, we'll have to see when September rolls around. And then I think at that point, we'll just have to go with week by week and see how the market develops. But at this point, it does seem like the market is heading lower instead of higher. And if you take a look at across the other markets, I mean, that's the exact same scenario we're seeing playing out. The crypto had a massive rally, but then they are all falling back below those 20, 50 moving averages. So it seems like a lot of these rallies are kind of selling off here. So I think that would be the right path for the markets to follow.
Totally agree. And you mentioned crypto. We talked about when it broke below this support, broke below this trend line, then that was a signal like, hey, no longer be long. And you can see we dove, we had a little bit of a bounce, and here we are looking really, really ugly here on cryptos. So when we take a look at these equity markets, we've got to say that we were at a +1. We got to move that down to a 0. We're right in the middle. We're below the 20, but still above the 50. And now the slope of the 20 is now flattening out. So we no longer have a buy signal on the slope of the 20, 50-day moving average. We're to 0. Look, like I said, my opinion is we go down significantly. That's my opinion. I used to trade my opinion and I would get myself in trouble because I would then reinforce my opinion with more data, with more facts. The whole time I was losing money because I just would not give up on my opinion. We trade the market in front of us. Right now it's a 0. If it breaks any lower next week, then we think it's going down to the 50-day moving average, and that's going to be our target there. Let's take a look at what's on the economic calendar. It is the first week of September, so we do have some big reports out. In August, there isn't much news left. Really, the big news is going to be Thursday, U.S. PMI, And also on Friday, we've got the non-farm payrolls report for the US. We're going to be meeting live as a firm on Friday morning with an active trading session to try to catch some pips off of this non-farm payrolls report. So next week, we've got market sentiment is turning bearish. We think we're going to come down to that 50 SMA. But look, we can't be wildly bearish here. Central banks, we have some Fed speakers on Tuesday and Wednesday, but that's really about it. Nothing else. And then economic reports. The big one is the U.S. employment report on Friday. So let's take a look at all the currencies one by one. Let's give them trend scores and velocity scores. Starting in the crypto space, I'm going to blow through these because they all look terrible. Bitcoin looks terrible. We've got breakdowns on the trend charts, breakdowns on the velocity score. Everything is telling you to be short cryptos and not to be long. Bitcoin Cash looks the worst out of all of them. -3 on the velocity score, really picking up some velocity on the downside. We bounced up to a moving average, falling down. It's definitely a sell here on Bitcoin Cash. Ethereum was the one I was the most constructive on, and you can see that as far as right now, it's the only crypto that hasn't plunged significantly below its 50-day moving average. Here's the problem. It's still looking to break the 50-day moving average. It's just the best of the worst. That's all it is. It's the best one of the worst, but they're all bad. If we take a look at Litecoin, and we plunged below this 50 a week ago, had a little bit of a bounce up there, couldn't break it. Now we're looking to roll back over. Cryptos are all a sell, all -2s, -3s. Let's go over to the foreign currencies. Here we have the dollar, and boy, the dollar is back in play. We talked about this pattern here. We went below the 50, we came back up, and then we turned down pretty hard. And at this point, I remember thinking, hey boy, this is it. Dollar's finally going to roll over. Again, that was my opinion. The dollar said, hold my beer. I'm not done yet. We poked our head right back above the 50. We've now had a very mild pullback here and a little breakout to the upside. So I think we're going to run back up to these highs here on dollar. Everything is going their way higher, +2 on a trend score, +3 on a velocity score. The dollar saying, hey, I'm back in play on the long side. Now with a big risk off market, you would typically see the yen spiking. This was clockwork. Over the last 20 years, anytime the markets tanked, the yen spiked. That was until the Bank of Japan literally killed the yen. And now the yen isn't looked at as a currency of safety at the moment. It's just not. So people aren't flocking to the yen. And you can see these candles, there is no reason at all to be trading yen at all. Until we start to get some actual movement out of yen pairs, there's no reason to trade them whatsoever. Anka, what do you think is going on with yen?
I think yen has definitely had its move, and right now it's just not one of the currencies that's actually on the move. And, this is one of the things that we talk very much about. Focus on what's moving. And, there's certain currencies that follow the whole relative, the whole correlation. Now, yen is in a no man's land because of the extra ultra dovish outlook from the Bank of Japan. And I think at this point, it's just not catching the bid at all. I mean, comparing to the last 2-3 months, yen has been pretty active. So it seems like the action is now moved elsewhere instead of the yen. If you take a look at the euro, now I think the euro is where the action is. The euro is falling down and the euro is actually rising. There's a lot of back and forth. So I think this is a typical summer trading that we're seeing where the focus then has shifted from a currency to a currency. Right now, it used to be the yen, and I think that baton has kind of passed on to the euro. I think euro is what's really in focus here. So I think until the yen gives you a better trend score, I think we just don't expect any sort of continuity. We can get some good velocity score in the short term, but that's pretty much it. So for yen to, I think we cannot play yen as what it's supposed to do. I think that's exactly what we said earlier. Trade the markets in front of you, and yen is telling us that, is it just right now I'm sideways. Nothing's happening. So it's better to focus on something that's actually moving than spending time on this.
Great call, and that's something you've always seen so well, Anka, is what's actually moving. Moving on to the Swiss franc here. Now, I was starting to get a little optimistic that Swiss franc was actually going to run out of this ascending triangle base that had been forming for months and months and months. We broke out a little bit, had our pullback. Okay, so we're not out of this yet. So for me, Swiss franc looks okay. We got a +2 and a +2. It looks okay, but again, my worry is the velocity there on it? I need to be shown that it's actually going to break out of this resistance area to try to go significantly higher. So I like the Swiss franc, but I'm not putting it at the top of my list at all. The euro is a curious one. I have loved the euro short for the last month or two. It's been very good to me. I am not going to quit being short euro because the technicals are telling me, hey, it's still really weak. It's still really weak. It's just having a nice bounce here. I am not going to step in front of this train of this euro bounce. But what I am going to do is when the train stops and then it turns around, I'm ready to get back on euro short. But I think this is going to be a fairly decent bounce here off of this low. It's been pessimistically bearish for a long time. I think we could easily have a bounce, all the way up into this area, maybe even a 50-day moving average on the euro basket. Once it finally tips over, I'm ready to get back on board, but I am no longer looking actively for euro shorts early this week. The pound, however, has not had that bounce, and you can see it has just been bleeding lower. I love these low bases. Typically, a low base is flat. Price comes down, it bounces along an area, and then it plunges. The weakest patterns, they go down, and then they just do this like fading little base here, and then it breaks down again. I love this pattern. It's one of my favorite patterns. So for me, I am all aboard on the pound. The problem is there hasn't been a lot of meat on the bone over the last 5 days. Pound trades haven't given you a lot of return. I think that's going to change next week, and we'll take a look at some pound crosses for sure, but I want to see that velocity pick up. Right now, we're just not seeing that velocity pick up. So pound is a great looking short, in my opinion. Coming over here at the Canadian dollar, okay, we got the same thing going on in the US dollar. We broke down below, we rallied up, we plunged lower. We've now recovered. I don't hate the CAD on the long side, but I don't love it. +1 on a trend score, 0 on a velocity score. You know what? I'll go look somewhere else. Not interested. Aussie dollar. Now, the Aussie was fantastic all week long. All week long, the Aussie was fantastic. And then Friday, it got hit. So we have to back off of our bullishness in Aussie. The velocity now is telling us it's likely going to pull back. Again, if this market pulls back anymore, it is not going to be good for the Aussie. The Aussie is likely going to pull back as well. I still like the Aussie on the long side, but is not in play right now on the long side. I need to let this market bottom out, have a bounce, look to have more strength before I can get excited on Aussie crosses again. Which brings me to my favorite short, the Kiwi. The Kiwi was a great short all week long. I mean, look at these candles. These nice expanded range candles like almost every single day but Thursday. Just a great looking chart here. Okay, we're getting down into some support. We could have a little bounce here, but I am actively looking to be short Kiwi going into the week. So if we take a look at trend scores, a lot of weakness out there. Euro, pound, Kiwi, really weak. Cryptos look like garbage at this point. Look, they're going to have a bounce at some point. It's just not right here, right now. We got Aussie, Yen, CAD are just okay. Like I said, these are all on the shelf for me. I'm not looking actively to make trades in any of these. And then it's dollar Swiss franc with the dollar clearly head and shoulders above the Swiss franc. So this week, I'm actively going into the week looking for dollar crosses. With that being said, where's the velocity right now? Well, remember, we had euro and pound as the weakest on trend, but right now, they're not weak on velocity. They're actually having little bounces. So euro's having a big bounce, pound's just basing here. So if I want to make a trade early on next week, I've got to go where the velocity is. And right now, it is Kiwi and Aussie. So this is pretty easy, pretty simple. Aussie dollar, Kiwi dollar, those are the trades I'm looking at. And again, to be short cryptos. So let's take all this information, all that we have as far as bullish and bearish trades. And let's look at some charts here. So let's take a look first at my favorite cross, which is Kiwi dollar. Let's start out on a daily chart. So we got this daily chart, and we take a look at this over the last couple months. You can see we just have these moves, these rolling hills, a move up all the way up to 65, a fall all the way down to 62, a little bounce, a fall all the way down to 61. Again, look, we're getting nice price action. It's not a big, fast, strong trend, where it's just a downtrend making lower lows and lower highs. This is kind of this rolling wave here. Ultimately, you do have to take a notice of 61 as some support. So here we are at 61.37. We've just broken a 5-day base here. So we have this 5 days of little basing here that we've now broken. The problem is the target is 61. Now that is roughly about 0.55% away. That's typically smaller than the size of move I like to go after. I like to go after at least 0.7% on a move. But again, if the market is really weak, we could get in and we could just bust right through that 61. If it busts through that 61, you can see there is no support down below. So for me, I'm looking to get into this one fairly early next week because I do think it's got a lot of velocity to the downside. If we take a look at a 4-hour chart, we can see that things are looking really good here because we just broke this major support line on a 4-hour chart. So the velocity should start to come into this one pretty quickly here. So I like this one really right away if you want to take this short over the weekend. I don't do risk on trades long over the weekend, but I do risk off trades short over the weekend all the time. So I like this one, Kiwi dollar to the downside. The other one is Aussie dollar. I'm going to keep it pretty simple here. Aussie dollar, Kiwi dollar. Now you can see Aussie's had a little bit bigger bounce. It doesn't look as terrible. We've had this little bounce up here. There is going to be some support here at 68.60. I think you just have to wait until that breaks. But let's see if there's any major support lines under that. No, this is going to be a really good break here. So if we break this 61.60, I don't see anything holding this up really until all the way down to 67. So if we do have a lot of weakness, maybe even the Aussie dollar has a little bit more upside if we get a big break than Kiwi dollar, because there was nothing holding up the Kiwi dollar either. So have at them. I like both of them. Kiwi the best, at least as a velocity score right here, right now. Okay, what do you want to take a look at?
Yeah, Rob. Well, I'm definitely on the same page here as far as the currency pairs we look for. I mean, if you just follow the velocity or the velocity scores and the trend scores, I think it's just pointing at the right direction that the dollar pairs are where most of the action is. So Aussie dollar, Kiwi dollar looks great. I always like to look at relative strength and weakness and try to see, okay, is one better than the other. Aussie Kiwi has been a good one that I've been kind of paying attention to because, these are the ones that when they deviate from each other, I mean, we are up above now, broken out very nicely. I mean, months of consolidation onto the upside. So, trying to decide between the Aussie dollar and the Kiwi dollar, I think at this point, the Kiwi dollar looks like a better short just because we have that negative divergence playing out. If the Aussie and Kiwi were doing the exact same thing, then we can actually go with any of those two currencies. But right now, I think Aussie Kiwi broken out. And if we go, Rob, if you want to take a look at weekly chart, I mean, it's clear to me that there's this is running into the next level of resistance, which is about 113 area. And Rob, if you want to zoom out a little bit, you realize that there's not a whole lot above the area. I mean, that's a very strong level of resistance. So I think this whole Kiwi trade will play out until we hit that level, and then we'll see if it does break out above it. So I think I like the Kiwi short until we hit that 113 area in the Aussie Kiwi pair. And after that, I think I'll rather switch to the Aussie short because I think at that point, we might see that relative strength and weakness flip a little bit in this pair. So this is the main one that I'm really paying attention to. Especially as we are try to dabble between the Aussie dollar short or Kiwi dollar short. Rob, if you want to pull up euro dollar, I think that's another one that looks interesting to me. I know we had a lot of volatility, but look at the daily chart. Look at the reversal. I mean, this is a very negative sign, especially when you try to see things pump up and then they all fail. I mean, we have this 5-day period where it has had some rallies to the upside, but then it reversed. So this is again telling me that it wants to go lower, and that's where I think once we get below that 99 area, I think there's a lot more further downside. Especially if you look at 4-hour chart, I think the longer it consolidates, the bigger breaks it get. Now the question really is just is next week the right timing, or should we or could this happen after the Labor Day? And I think this is where it's all about timing. If I'm looking for a break, it needs to break that the floor there, and it might take a week or two, but we just had to realize that we got one more week of summer trading. This is where liquidity is thin, and we could see some runs here and there, but I think once we get after the Labor Day, that's what we need to see, all the markets lining up together to give us the best move that we can find. But that's what I'm really looking at, Rob. I think one more week, and then I'll be more gearing towards some breakout strategies because I think that's where we can see some more power behind those moves. Otherwise, we have a lot of that on a 4-hour chart. We got this consolidation, and there's only a handful of currencies that are really breaking down, just like we saw in the Kiwi. So I think next week we just have to focus on what currencies on the move and use that for the rest of the week.
Anki, you did a great video this week called Time Frame and Volatility. And you talked exactly about this concept of throughout the entire year, sometimes there's big volatility, sometimes there's small volatility. And as a trader, to understand when these waves were coming, and I think you hit this right on the nail that I think maybe even at the end of this week, but after Labor Day, there's no question that we're going to see some really major moves. It happens almost every year. And so I think that September is going to be even better than August was. And I think breakout strategies are going to work fantastic in the month of September. So to wrap this up, we think the equity markets, unless they bounce very, very early next week, unless somehow some news comes out or something happens to where Monday is a big up day, I think these markets are likely to go down to that 50 SMA, which is about another 2.2% lower. That's likely to help the dollar. That's likely to help the risk-off currencies and likely to punish the risk-on currencies. So as always, follow relative strength and weakness. Do your trend scores, do your velocity scores. Make sure you're only trading the things that have movement. Do not trade the things that are dead and listless and just choppy. You're going to get chopped out on your stops all the time. Make sure you're only trading things that are moving. That makes it to where you get stopped out a lot less. That is it for the Currency Room. Thanks for joining us. Goodbye, everyone. Have a great weekend.